We'll kind of kick things off and let everyone introduce themselves, just real quick, short bio, and then Carly, you can jump into questions and everything.
Cool. Okay, looks like this is working pretty well. So I guess I can start with my bio, and then we'll just go down the line for the panel. So my name is Carlos Cisco. I'm the founder and CEO of Select. We are essentially a next generation Black Card concierge and membership community that connects people with exclusive events, pricing, and perks at a little over 1.6 million locations all across the globe. So most top hotels will do up to 70% off with us. A lot of top restaurants will do priority access plus free drinks for your entire party, or 20 to 40% off the full bill, or both, depending on the venue. Similarly, for nightlife venues, and then we also have all sorts of top retailers, lifestyle brands, automotive brands that do exclusive pricing for our membership. Serial entrepreneur, started my first successful business when I was 18, background in finance, and in addition to Select, I'm in a couple entrepreneurial organizations, so Young Entrepreneurs Council, which has been called by Forbes the most elite organizations for entrepreneurs, and I'm also on the Forbes Finance Council. So got a little bit of background in the space, as do all of our panelists.
Great. Jim Preisler. I started a company called Trade.io, which is not really what I'm particularly excited about at the moment. It's a small crypto exchange, and it has a very profitable FX trading platform called TO Markets. But this is all outside the U.S. But inside the U.S., what I've actually been working on for the last 2 years is about 2 months ago, I became the first registered broker-dealer to be licensed by FINRA and the SEC to do digital security offerings, including blockchain and DLT-based assets. So I have actually the one and only license now in the U.S. to do STOs all the way up to peer-to-peer trading of those digital assets. So it's been stealth mode for 2 years, but we just got the license, and we're just starting on our journey now to build up the company. But it was quite the effort working with regulators, and it's a lot of stories I can tell you about what they truly understand about blockchain and crypto, because I know firsthand. I mean, we would have calls with 20, 30 people on the line from both FINRA and the SEC, from the top all the way down to the functional types of people. It's very interesting conversations.
Hi, I'm Katya Chaplina. I'm part of Sprint Group at Citi. It's one of our newly formed strategic investment groups, and we concentrate specifically on fintech investments covering credit markets. So it's anything from kind of corporate bonds and loans to kind of structured products. And I actually came from an entrepreneurial background. I was working in an alternative data company, was the chief strategy officer, building data over the last couple of years. And when I saw the opportunity to kind of diversify my background, I decided to join Citi. But before this, my kind of beginning of the career was around trading, so I have a lot of markets infrastructure kind of experience. And back in the day, I started one of the first quant hedge funds, which turns out was actually a really good experience coming back to, trying to invest into companies which are relatively early and startups, and also have, this kind of complex capital markets aspect to them. So very happy to talk to all of you, during the event, after the event, and looking forward to the questions.
I'm Rodrigo Suarez. I run INV FinTech, a startup accelerator in partnership with Fiserv, the core technology provider, and 15 banks and credit unions. Before that, I co-founded an advisory firm focused on financial services. And I have done consulting work also for banks, startups, and government, both in the US and in Latin America.
Hi, I'm Locke Brown. I studied math and economics in school. I was the lunatic running around talking about Bitcoin. And I ended up writing my thesis on basically market efficiency in cryptocurrency markets, making some trading algorithms for that. And then I went and worked for Bill Gates' private investment office, first as a trader across multiple asset classes, and then also on his private equity and venture capital team. And then I actually set up a internal blockchain working group there with our COO. I guess that was early 2016. And serendipitously happened to actually meet this brilliant distributed systems engineer at Microsoft. And we went down a rabbit hole for basically a year, and ended up both jumping ship from our jobs to start a cybersecurity authentication startup. So I've been doing that for about 3 years now.
Awesome. So one of the things that's really cool with this panel is we've got a lot of people with experience on both sides of the table, which is pretty rare. I don't think I've ever seen a full panel where that's the case. But let's start with the entrepreneurial side. We've got a lot of entrepreneurs or aspiring entrepreneurs in the audience. And we'll start really general. What made you to decide to start or co-found, or in the event that you joined early a startup company?
Yeah, so originally when we were looking at, I was always excited about transformative technologies, and starting from the internet, I was around. I was actually one of the first internet analysts. I helped a lot of the early stage internet companies go public. I was at PaineWebber and UBS, on the investment banking side and research side. So I've always been excited about that. For the blockchain space, I was never, I'm still kind of on the fence on a lot of the digital currencies, but I saw how the technology could be used, and I truly understood how it could transform asset classes. And it's more about the obvious, but actually understanding when you buy and sell a stock, what happens? What do companies like DTCC do? It's one of the largest companies in finance, and most people have no idea what it is, what it does, or even heard of it. And it's a multi-billion-dollar company that if you own any stock in the world, this is the one that ultimately tells you that you own the stock. So I was looking at blockchain, and a couple of years ago, and I was trying to figure out, okay, so where is our value in the equation? We realized our value was the true understanding of how finance works, how trades actually settle, all that, and what the regulations were that were required, and how we could apply that to blockchain. And we did what everybody does. We hired a bunch of lawyers, spent a lot of money. 100% of it was wasted because the lawyers in this particular space didn't know what the hell they were talking about. And so what we decided to do about 18 months ago is we fired all the law firms, and we went direct to FINRA and the SEC, and we started working with them on a personal basis. And I think that actually, to a large extent, was our secret sauce of how we achieved what we did, is because we understood the regulators at a fundamental level, which is we weren't going in and saying, you're stupid, blockchain's going to be the next thing. We sat down and said, okay, Mr. Regulator, how do we help you understand the market in a way that does not get you fired or in trouble for your job? How do we answer and solve your problems? So we actually sat down with the regulators and figured out what the problems were, what their hot buttons were, and made it easier for them to come up with solutions because they didn't understand the technology. So our bridge was helping them understand the technology. So I think from an entrepreneurial standpoint, what this boils down to is you can waste a lot of money. The quicker you can figure out what your core strength is and what your secret sauce is, the more successful you're going to be. And for a lot of companies, it's actually quite hard to do that because you could be scattered all over the place very easily. And with limited resources as a startup, you have to figure that out very fast.
And lawyers will take most of your money.
Two great pieces of startup advice, I think, but especially like finding out your true specialty and value and really focusing in on that. That's something that I think has been paramount to the success that we've realized thus far.
So my perspective on being an entrepreneur and kind of coming from that side over the last few years is it's really about personality trait. It's not necessarily about where you are. There is something entrepreneurial to be done at any big institution, small institution, startup. There is always need for for somebody to drive the process and come up with not just new ideas, but ways to actually execute them. And I think that's what really distinguishes entrepreneur from, kind of the rest of the group is somebody who can execute on, on what they're trying to achieve. In kind of my personal experience, there are always kind of two things to it. There is the investing part, which is what my group does, but there is also incubation part, which very often I actually find much more interesting because you're dealing on one side with people who are experts in their fields, and they're the investment professionals. They very very specialized kind of product people, and on the other side you're dealing with a problem that either nobody ever tried to address or nobody ever addressed successfully. And you're trying to merge the two and apply new ways to, pretty like legacy structure sometimes. So it's been actually a very interesting journey trying to build something entirely new, trying to change the thought process and, how the workflow actually happens in a bigger place where there are established ways. when you're a startup, it's quite different because you can constantly pivot and try new things and, change your mind and test different things. You don't necessarily have to come out with an approach day one. In a bigger institution, you actually have to be almost more of an entrepreneur because you have to pitch an idea that's good, but you also have to be able to address every solution, every concern ahead of time, because otherwise you will just never get it done.
Yeah, so I agree, it's like very much like a personality trait. I mean, for me personally, it was, an interest in being closer to the real action and seeing like the real value, the tangible impact that I was having in my day-to-day job, if you will. And in working with entrepreneurs now, that's, I think, part of what I enjoy, being around people that have this drive to build something from scratch and, take the risk to, fail because they believe they can, push forward for, something interesting and different to happen. So I think that's what motivates a lot of people to be, entrepreneurs. The reality is that most people who take on that sort of path will fail multiple times, and it requires a very specific type of personality and character traits to be able to do that. It's a weird type of optimism that you don't see often, and to your point, in some cases that's necessary, and you can do that in big organizations. In some cases, people prefer to do that on their own and have the flexibility, and you ultimately need both, right? I think both sort of benefit from each other.
Yeah, to kind of piggyback on what everyone here has said, I think that ultimately you have to be naturally curious, and there has to be a drive, and there has to be a solution that someone wants to solve, right? For you to jump ship from whatever it is you're doing and start a company. And at the end of the day, you have to be willing to wear all hats. You have to align yourself with people with similar frameworks but complementary skill sets. All be willing to sweep the floor. It's always a learning experience, right? And it's something that people can't really teach you a lot of times. I mean, the number of different regulatory bodies and counties and cities and everything that you're filing with and working with, there's just a million things that always come up. So prioritizing time and really being conscientious with who you work with and bring on is super important, I think. And so I was super fortunate that organically my co-founder and I happened to actually develop our technology and what we're doing together. So that worked out well, and we had some hard lessons learned with some early hires that weren't the perfect fit. We spent probably, I think I fired 17 lawyers, and I got 2 disbarred actually. Yeah, this is kind of a crazy story. I did it super quickly, so I was like, this is a couple years ago, I won't name the firm, but I will say it's in the Pacific Northwest, and these 3 partners would take me out to lunch like every month because they wanted to like pick my brain on like safe tokens and all this, because I was still exploring like doing an equity token offering. We ended up just doing traditional venture capital and stuff, but and then one day at lunch, the 3 partners sitting there with me, and I'm just kind of like rattling about God knows what, and then they literally straight out of a movie, this guy slides me a manila envelope across the table, and it's like, "Look, you found this on the floor," and I was like, "What?" And it was like another client's confidential like information. So I was like, "Is this how the legal industry works?" And I talked to a lot of lawyers that I trust, and they're like, Jesus, like, no. So yeah, to your point, I think, there's a lot of good firms out there that will work with you as, to get off the ground. There's a lot of good accelerators. A couple pieces of advice I would give is, think wisely about, what resources you need and be realistic instead of just optimistic in terms of, how long it's going to take to do something and what you're presenting that strategy as. A lot of people want to go and just raise as much money as they can. That's not necessarily always a good idea. I could probably talk about this forever, so I'll stop.
Great. So Jim and Locke, you both spoke to this a little bit in that, but expanding on it, what are some of the biggest challenges you guys face founding your own companies, and how did you overcome those? And then also just what sort of general tips and advice would you have for people who are in the process of building a business or who are thinking about starting a business?
So I think the biggest part of it that I think is helpful is a sense of self-reflection, because you're going to make tons of mistakes. It's part of the equation. But being able to figure out what your mistakes are and how not to repeat those mistakes is kind of what makes the successful path achievable. So I think the hardest challenge that we have as a firm is figuring out, okay, you just don't want to keep banging your head against the wall, right? So you have to be efficient, you have to be thoughtful. In our case, we don't have any outside funding, so it was this whole 2-year process, we self-funded. So it's a difficult position, but we were fortunate enough that we had the resources to fund it that way, and get to the point where now we have the license, we're not promising, we have the proof of the pudding, and so now we're trying to go down the path of where do we go from here? But I think that ability to kind of be self-aware of what's happening is one of the critical components that I see, and it's very, very difficult to do. I mean, to be self-critical and analyze and say this is what's not working. Let's not keep repeating that path. And what's helpful there is also having the resources. So having those mentors you can turn to that have experience. They don't necessarily have to have relevant experience to your industry, but just be able to have that dialogue with people, these mentors you can talk to help kind of get out of the box and start thinking through problems more critically. I mean, they don't have the answer, but I find that dialogue sometimes helps me figure out what the right path may be. So those are kind of the challenges that I think that I face, is just really trying to figure out where to take things and manage your budgets, because it's not easy. It's a very, very difficult journey, and it's as we know, most entrepreneurial companies, and probably like 90% of them fail. So it's a very big challenge.
Yeah, I think the biggest challenge is prioritization and how to best spend your time, because there's a billion things you could always be doing. I always wish for like 5 Mondays, 8 Tuesdays, 24 hours more each day, but we don't have that luxury, and I think maintaining a sense of balance in life is important. The first 6 months of New ID, I probably slept like 4 or 5 nights a week. I said controlled hypomania at some point maybe, but obviously not sustainable, right? So you have to make sure that you're in it for the long run. So a couple quotes that I think encapsulate a lot of the frameworks that have helped us kind of overcome some challenges. One, be stubborn on vision, flexible on journey. That's by Norma Day Chandra. I'm terrible with names, but the other is we play the long game and play to win, right? Don't just think short term, but think about like what your actions are actually going to set you up for longer term. I think people is the most important thing, right? And as you grow, from just you as maybe a 1-person startup or 2-person startup, with your founder and basement or whatnot, and you bring on other people, you need to make sure those people are aligned with your values, your vision, your frameworks, because you're going to spend a lot of time managing people, and everyone's different. And so I think instilling a sense of camaraderie and keeping morale high is always a challenge, but something that's super necessary to do, especially for founders, because it's turbulent, right? There's highs and lows, it's like maybe you're not closing the first deal you thought you were, or the funding round's taking longer. And you're like, who knows? A million things happen. But having that sense of calm, dedication, and making sure everyone that's working with you is inspired is super important.
Awesome.
And those are challenges.
I actually wanted to add one more.
Yeah,
to this.
sure. Yeah.
And this is actually true, being both in startup and also big organization. I think the hardest thing for me to realize was you constantly need to pivot, so you constantly need to change business model. When you're in a small organization, usually, you start with a thought, a dream, something that you're pursuing, and there'll inevitably be that kind of feedback loop when something is off and you keep on believing in it. And I absolutely kind of agree that you just have to pursue the same dream, but sometimes the way you approach it actually has to change, and you kind of have to test throughout the process. And in a startup, it's actually a relatively easy process because you're your boss, right? You kind of drive the process, and the only the only feedback you really care about is, are you getting clients, are you getting traction or not? In bigger organization, the pivoting itself is becoming much harder because you basically have to admit to a lot of senior people that you were wrong in, whether your idea or your approach, and that you will try again. And just convincing somebody over and over and over to let you try again is quite difficult because you keep on going back to the same people. So that would probably be the biggest difference, but also the biggest challenge that occurs on both sides.
And can I add one more too?
Yeah.
I think, one huge challenge I faced was how to balance, reevaluating whether or not what we're doing is the right thing versus, executing and just pushing on along one path. And, after a little while, I started putting, basically a stake in the ground at some point in the future, whether that's, time-based or after some milestone, where I said, all right, look, we're pursuing this path, we're gonna get there, and then we're gonna evaluate whether or not that was right, and whether or not we continue down, the same path, or we, flexibly change and alter where we're going. So I think that finding that balance is pretty difficult, and depends on what you're trying to do. But it's super important, because otherwise, you can just constantly take all of your energy and question whether or not what you're doing in a given moment is actually worthwhile, right?
So I'll add something a lot more specific. So we work with startups within fintech that are essentially looking to collaborate or partner with banks or larger technology companies. And my own experience has also been in selling to banks. So I think one of the major areas where a lot of fintech startups struggle is precisely in doing that. You're seeing more and more startups that are coming up with a product proposition that is either B2B or B2B2C, or that requires some sort of enterprise sales effort. But not a lot of the startups that are doing that are prepared to undertake those long sales cycles. And I think that's one of the things that I've seen a lot of founders struggle with. In our experience running our accelerator, for example, we recently received applications, and about 75% of our applicants had that type of business model that required some form of enterprise sales efforts, but only close to 20 or 25% had actually partnered with a bank or a larger technology company, despite being around for 1 or 2 years. So I think that's a major area where founders specifically within fintech need to be more and more aware of how to approach those interactions, how to understand the regulatory component that is very important in making those discussions effective, and also how to be prepared for the road ahead, because it's long, and especially if you need to pivot and iterate, you need to find the right balance between doing that, but also having a very long cycle to actually get some form of validation.
Awesome. Yeah, I think there was a lot of great insight in that, so hopefully people were taking mental notes or writing it down. But definitely things that we've seen building our business as well. Obviously can't touch on every point, but definitely the idea of putting something really far out. Like basically we had a vision of what we wanted to be the absolute best at, and where we felt we could be the absolute best, and then knew that the path there would be like that. It would be sort of constantly changing and constantly evolving, because when you're talking about the financial industry especially, there's of course a lot of money to be made, and like as new technologies come about, as industry trends shift, like you have to be on top of all of that, and that's really true for any startup. And like there can also be like these little pivots that happen along the way. Like I know, for example, one of the tools we used a lot for marketing in the beginning were Outbrain and Taboola, and then all of a sudden one time, at one point they just basically stopped working because they sort of let themselves get like filled up with these like crap, spammy looking ads, and all of a sudden all ads on their platform are less effective, right? And like similar things with something like Facebook. A lot of people are building businesses on Facebook, and now if you talk to the venture capital community, like they don't actually like seeing someone just crush it on Facebook, because if Facebook makes an algorithm tweak and all of a sudden your ads stop performing, what are you going to do? Like that can actually destroy your entire business. So I think like having the long, far out goal, but being ready to pivot and face different challenges is definitely a really important point. And then just to build on the comment about fintechs and banks, like I don't know if most people know that about the fintech companies, but when you have companies out there that are getting a lot of publicity for, for example, credit cards like we're about to be doing or something like that, like they're mostly built on top of banks. So like Brex has an issuing partner, like Petal is a New York startup, they have an issuing partner. Like these aren't companies that are going out and getting their own charters because that's almost impossible to do. There are one or two now trying that, but it's an borderline impossible road. So it's just an important part to make that like a big part of success in fintech is actually exactly that, being able to partner with the right business so that you can bring your product to market. Very, very cool. Okay, so switching gears a little bit, and this one's a bit more for Katya and Rodrigo, but obviously everyone's got some investment experience, so everyone can feel free to answer. But what are the types of companies that you're usually looking for? Katya, in your case, as an investment, and Rodrigo, in your case, for the accelerator. And also, what are the traits you're looking for in the founders of those companies?
Sure, so it's a very deep question in general. I think half the time when we see what we really, really like, we actually weren't necessarily looking for that thing. And I think it's true across any strategic investment group or across every VC. So the way we think about it, I think I should probably first break down, what type of funding is actually available out there. And I think for a lot of startups, this comes as a news, especially when we explain to them what we do, as part of Sprint team, which is strategic investment, but it's really not for the purpose of just generating returns. So we're not investing in a company and hoping to sell it 3 years later for triple the valuation. What we're hoping for is actual business solution. And in fact, if there is no solution to a specific problem within one of our many, many businesses in markets, there is actually, it doesn't qualify to be invested in. So I've seen a ton of really interesting, really good companies, but it just doesn't fit, profile of a specific business where you implement it day one. And that's kind of like a natural, no-go. But in terms of things that we're actually looking for, it's actually, it's actually very, very broad. So sometimes we start with, a very kind of vertical type of approach. So this is the thematic thing that we want to solve over the next 2-3 years. This is what we think we should do. Let's review all the companies. It's kind of very top-down, very, unstructured kind of, let's just poke around and see what we find. Sometimes it's a very specific problem, and you basically just end up, you end up reviewing, who the players are. You're just trying to find the best structure of how to invest, and you make sure that every box is checked. We do not necessarily have, a specific, this is the size of the company, or this is the maturity, or the founder background. But I think when you see a good founder, you just know it. It tends to be people who are truly, truly passionate for it. Like their business is their baby. You just know it because you see them. You just hear it in everything that they do every day. And then you also get a lot of people who, I would say, are like experts in the field. A lot of people who come from Wall Street, who start fintech firms. And sometimes they have that background, of being entrepreneurs, just part of their personality, and sometimes they just don't. They know the problem, but they just don't necessarily have the right approach. It's always about finding balance, if you like.
Definitely. So in our case, as I mentioned, we work with startups that are looking to collaborate with banks and specifically build on top of bank infrastructure, which is also an area I think is becoming more and more interesting in fintech. So startups that are enabling banks to do things that they wouldn't be able to do with their legacy systems and their core applications. And what we look for is founding teams that have an understanding of how banks think, that have an understanding of the problems that banks have or opportunities that they could mutually benefit from. You frankly often see founders who go after a problem that doesn't really exist. So we're looking for people who understand, how bankers think, how to sell into banks, that have either previous experience or a track record of some sorts, or the credibility to make that happen. I would say that's maybe one of the most important things. And then, obviously you look for people that are smart or capable to, take that initial idea and actually make it happen and do so quickly. And as far as the, business itself, you look for something that, has a deep, technological and product moat that's defensible as well. So I would say maybe those are the main things that we look for. And to your point, as far as the stage or the team size, I don't think that's as important as, our belief in that company's ability to actually operate well in that space.
I think actually I should add one thing. So, on the stage and kind of the size of the company, I think that part is actually very quantifiable and relatively easy. The same goes for revenue, the same goes for business model. How quickly can you scale? How quickly you can, build certain, market reach that you're trying to build. So all those things are approached in a very kind of scientific way. It's the kind of human factor that it's almost hard to define, and I think you kind of nailed it. It's you just know it when you kind of see it.
Right.
Great.
So yeah, just as a quick aside to that, is that, one of the functions under the license that actually I'm personally responsible for is that we have securities licenses that we have to vet all our partners, all the investors, all the fellow brokers, the banks that are involved in the transactions. It's a supervisory security license, which I hold. So personally, I'm responsible for that. So, I can tell you on the STO side, we're seeing pipelines, huge pipelines. So we're partnered already with Securitize Harbor, Tokeny, Tokensoft, Liquify. This all happened in the last few weeks. And they all have their own deal pipelines. And looking at these pipelines, they each have maybe 50 to 100 deals they want us to look at. I'd say lucky if there's one good deal in there out of those pipelines. So there's a lot of vetting that has to take place with these transactions. And it's not easy to find these good deals. So, particularly in the security token space, out of the 100 deals, 50 of them will be complete startups, right? So those are off the table. Unless they have something so incredibly unique that it makes it interesting, they're, maybe a white paper. But we're really focused on the deals that are either real assets, so, high-end properties, name brand properties, branded developers, real assets, oil and gas, things like that, as well as companies that are clearly profitable and kind of proven the track record. So on the investment side, we look at companies that are in that late stage of development where they're almost ready to go public. And even at that stage, it's very, very hard to find the gems, because you'll find tons of companies that are profitable, they're doing well, but they still have tremendous growth challenges ahead of them. There's problems they haven't solved, so maybe they're break even, but in order to get to a real traction in the marketplace, there's a big effort involved and a lot of cash that needs to be infused. I think the ultimate thing that changed a lot of this, and I think it's going to have a big impact going forward, is that we saw the big end spigot get potentially turned off at the top with kind of these failed unicorns that are trying to come to market. And I think that we're going to see the reverberations of that for quite some time. Because one of the things that can dampen development, dampen growth, is when you shut off the faucet. And what's happened to a lot of extent with WeWork and many of the others is that faucet is not all the way closed, but it did close a good percentage. And I think we're going to see large implications to the overall market and growth strategies, because it's going to become imminently harder to qualify for raising money. And I think that's going to be one of the big challenges that a lot of these companies are going to face going forward. It's not easy as it was a year ago, and it's certainly not as easy as it was during the ICO phase.
Right.
So I think you really have to have the proof, and you have to satisfy people like Kaya and like prove themselves that you have not only the business plan, the drive, the spirit, the work ethic. It's going to be that much harder for companies to be successful than it was before.
Quick question, how do you guys do KYC and AML?
So yeah, so the key thing, so we're working with a bunch of different token platforms, and they're all using different people. Some people are using Trulio, some people are using IdentityMind. What I have to build is I have to build the API links into all those different platforms. So I have kind of like an API middleware. Because what I have to do is I have to look at all the kickouts and rejections. So I have to approve all of those, and that's, right now it's a manual process. So literally go through and look at all the rejections and see what's missing, what needs to be done. So, so the way we're handling it is we're agnostic on the provider side, but we have to build the integration side.
Sure. We should talk more about that.
Okay.
I could probably talk a little bit to this too. I've sat on both sides of the table, both on kind of the venture capital side and raising 2 rounds for New ID. And I think, a lot of it is people chase after the big valuations and stuff, but if you're raising money and raising capital, getting the resources you need, align yourself with investors that actually care about what you're doing, and believe in the vision of the product or whatever, and isn't going to cause friction with you, right? You want to build a support network, right? I mean, they should be helpful outside of their money. It's probably bad, but I say there's some funds are like dumb money, right? It's just the dollars, and then there's money that's helpful as well. But what's super exciting is, with the digitization of equities coming online and that being so much more liquid and everything, as we saw with ICOs, as you mentioned, that was the craze, right? And there obviously has to be regulation, but we're going to see, I think, a lot easier capital flows, right, into efficiently allocated across different opportunities. Although people have to be, careful, right? We have paternalistic laws on this stuff for a reason, like being a qualified investor and whatnot. So I think there's a lot to work out there.